Good morning. Happy Tuesday, January 30th, and welcome on in. We're going to be doing some live trading potentially if we get any setups. There's a couple things I was looking at that I want to pull up. We're a few minutes before the open, but I don't really do anything anyway the first 15 minutes, so we'll see. But I was looking at gold, and a lot of the stuff I'm looking at right now, I think we got to take a step back and understand something really quick. We've got this is today, so Tuesday, right? We already had a couple big earnings drop. We've got Microsoft, AMD, and Google after the close. So those are the stocks like, well, we'll just watch how they react, but we don't necessarily, anything can happen. You don't want to go, I don't like to go into a day or a week or something and saying, well, because of all these things, I don't think we're going to do anything. Well, you never know, right? So that said, if volume is there, fair. If it's not there, then we're not going to really bother. So I might be looking outside of stocks right now, I think is maybe where my view is. And I'm kind of getting a little bit of a interest in gold because I have been looking at gold for a while. I do like gold's bigger time frame charts, like a lot. And I think we can get a nice push. The problem is that it hasn't been good. We haven't been getting follow through. When, if when it happens, I think we have a very big move in store in gold. Maybe even bigger picture, like a much bigger move, but I think we can get a nice push up into this area right here. I think it's very doable to go from, 2080, use the break area, all the way up towards, 22, 23. I don't think that's insane in a fairly short time. When I say fairly short, a couple of weeks, I don't think it's that crazy to think, but you never know. Gold can kind of do its thing and it tends to be slow at times, So keep that in mind. But what I'm seeing is that, okay, we're breaking this downtrend. So you have that on your side. Breaking the downtrend here on gold and then a stop loss right here. I mean, it's a simple play. So this is something that has my attention and has my interest because I think if we get that move, you could play this for like a swing trade idea and this could be, I mean, minimum, if you were to go to the highs that we saw on the original breakout, which we had that massive push and then immediate dump back down, that right there is a 2.5 risk reward. So you're risking 1 to make 2.5 if you just looked for this high. And as I just showed a few seconds ago, like when you broaden those charts out, this high is not that crazy when you look at the bigger time frame. So if you've got a big enough picture view, I don't think that that's that crazy of a trade by any means. So considering that as an idea, that's kind of like where my head is right now. Let's see. Silver, I don't really care to touch that. That's not tradable to me, though. This is just a middle of consolidation chop. Not interested. Gold's much stronger than silver based on the chart. So I like that look a lot more. Oil, not interested in that. Bitcoin, probably not interested there. Although it does look good. It's, it's pushing back up off the lows, which I like to see. That's kind of cool if you have Bitcoin. I don't really care, though. I'm not trading it like that. I just hold some. That's it. But market just opened up, so we'll see the S&P's down about 0.1%, which is like not much. Here's futures, not crazy. Dow, yeah, they're all down a little bit. So overnight gap down's a little bit, but nothing too bad. Let's go on, Kyle. How you doing, man? Should be a good. Well, I say should be good. Who knows? This could be kind of boring, to be honest. There might not be much going down because. If the volume isn't there, volume isn't there. So let me just jump back to the trade list and see how any of these stocks, if anything looks like it's interesting. Tesla, it's not surprising to me at all. It's really not that it's, starting to try to fill this gap, but I just don't think that that's tradable for me. Meta just had another push higher. It just keeps going up and up and up. It was up another percent a second ago, which is nuts. It's up to 405. It hit. Microsoft has earnings today. So Microsoft has earnings today, AMD and Google. On Thursday, Apple, Amazon, Meta are the three in the after hours. That's a big day. That's a very big day. Because by itself, like Apple and Amazon, those are huge weights. Microsoft's a big weight. Google's a big weight. I guess that's, I guess today's big too. Similar. Quite similar. Although Meta, I feel like Meta has a much bigger weight than AMD in the S&P and stuff. So, yeah, AMD is red, but AMD is down the most out of my list of day trade stocks. I'll swing these guys too. But yeah, here's AMD's 4-hour chart. You just got to wedge. Who knows if it breaks? Like you could get a nice breakdown of the bottom of this and get a nice little flush. The only problem is that I'd be concerned about the volume for that. So if it does break down, like you have that false breakdown kind of trade idea potentially popping up, which is what I traded yesterday and it worked. So we'll have to watch volume on that. Apple, not interested. IWM has been strong, but the biggest thing I said yesterday, and we're looking at this in the after hours, was if you just jump over to the daily charts on this, it's not looking great. What's going on, Peter? Surge trader might be trying to pull. Yeah. So the thing with that was they said, like, they sent me the email back and they were like, which is the prop firm that I originally used, traded with them for about 2 months, made $2,000, but technically didn't hit the targets. So I never was able to like get a funded account yet. I was like halfway through of getting funded. And then they just changed what your available tradable assets were as the new year began. And then I was like, well, I can't use you anymore because I'm not going to trade just, shit that I don't trade whatever you have available like most of the time. So I'm not going to use your platform. And then I made a post on Twitter about it and they just replied to me right now, actually. Whatever, I'll reply to them in a bit. But yeah, essentially, like, they had said, like, I made a post on Twitter saying, like, hey, like, if you guys are not going to refund people, like, that's not a good look at all. And I just went through and like talked about what they did, and that's it. But now they're like, well, you gotta delete the Twitter post if you want the refund. It's like, well, okay, well, that's great. Whatever. I'm sure, for some other, as long as the refund comes through, which I just got an email and I think that they are going to refund me right now, but it's like, geez, taking longer than it needs to be. There's ways that like I think there's, and of course there's more than just one person running the company, right? So there's a lot of, potential back and forth with different people, which can throw things off. Like the person who just replied to me now is like, yeah, I'm just trying to do my job. I'm like, yeah, I understand. But people who are running the company, it's like, you can make this a lot easier than it needs to be. Okay. So Tesla's the biggest gainer on my list. Meta, let's look at my main list. We got a lot more to choose from here. TLT's up, the 10-year's down again. This is interesting, and this is not surprising to me, to be honest with you. The 10-year is starting to crack a little bit. 10-year is starting to crack a little bit here. Got to look back at Oh, I still have TMF. I guess I'm covered on that. In phase, Meta. Nvidia's up again. 0.67. Look at that Nvidia. Look at that. By the way, that Nvidia chart does look pretty good. The only problem is that, well, that's not a problem. The big push in the after hours came off of SMCI, I believe. And then AMD has earnings today. So I would suspect that Nvidia will be watching that. Well, Nvidia will trade closely to how that does. So if AMD crushes and goes up, crap ton, Nvidia probably keeps going up, as crazy as it sounds. Target, let's look at these daily charts. Target's been in consolidation for a bit. Coin is up. ARK is down 0.5% after a big day. Yeah, IWM, I was saying yesterday before, IWM, the problem with this breakout that, yes, it looks like it's breaking a consolidation right here. The problem with that is it was on very low volume, relatively speaking. So don't love that. And I definitely, like, if you trade it based off the break, yeah, that's fine. Understand that volume was low, so this could be kind of a screw job. And that's partially the Dow that, let's see the Dow. When I got it, no, it wasn't on low volume. It was on decent volume. It was on good volume when it broke. Because the volume on the Dow has been pretty shitty since, like, the past like week and a half, ever since it broke out. And I've been in the trade and it hasn't been bad. I moved my stop loss now up to essentially right underneath here. But, you know, I'm looking for, like, the Dow needs to get, it needs to go another 400 points. So the Dow needs to go 400 points up before it drops back like 600 points for me to stop out. That's the center of the trade is. If it drops 600 points from here, or about, if it drops 500 points from here, I'm out. And if it goes up 400 points from here, I'll hit my full take profits. But I would consider maybe trimming some, especially if it has another solid day. We'll see. Yeah, the guy who just replied to me said, would you like it on the credit card? So I think that the refund will come back to the credit card. Because I thought that they were going to send it to the bank, which was kind of weird, but I was like, okay, if that's how you do it, whatever. But should just refund the credit card. It should be simple as that. I guess the other thing too is if you buy things on a credit card like that too, I wonder at what you're protected by, because you can go back to the credit card company and be like, yo, this is a scam. Like, I never got my money back from this company, blah, blah, blah. If, you know, they say they're going to refund you and they never do, then you can go to the credit card company and be like, yo, like, what's going on here? Like, can you, you know, dispute that? I wonder if you could. So that's another perk to credit cards. Another thing I just realized too is my Chase, I don't know if it's all Chase cards, but the Chase card that I had, or that I have, essentially gives you protection for when you rent cars. So when you go to like the rental car process, like instead of having like to pay for all whatever, like the insurance stuff, don't even bother, because Chase, essentially you're covered through Chase. And if you do pay for the insurance on these rental car companies, you actually void what Chase can do. So then Chase can't help you anymore, which is kind of crazy, even if you use your Chase card. So I was like, oh, that's cool. That's nice because it makes it a little bit cheaper. I don't have to worry about paying for the insurance stuff because I just use my Chase card and you're good. Yeah, I mean, you could do that if they do screw you. Okay, so back to gold that I was looking at. This, I think I like this. The only problem that I would have is I got to check like what the swap fees would be. Like how, that's the only problem that I have with you know, it's like, I was thinking about what's the dollar amount that you would need, that I would need to trade comfortably pretty much with whatever I wanted to trade on whatever platform. And not have to use a prop firm. And it's actually not as much as I think because I've been swing trading more. So I'm looking for bigger moves. I'm not day trading as much. Although, you know, I will still do it when I see opportunities. The dollar amount is not as large as I thought it needed to be for me to be good with just like, okay. So the reality is that if you trade with a prop firm for like a while and then you build up an account, like it's one thing if, let's say, you're paying down stuff or whatever and you want to use your money elsewhere, like what I've been using it for. Like I essentially am going there because I'm like, well, I don't want to have to hold, you know, money in an account that I could use that money for debts right now that I would prefer to pay off, especially after doing well in the market and not necessarily knowing that the odds of the market, of me being able to achieve the same, you know, investing returns that I did last year are quite low this year. Like they're not going to be as high. It could go, if the market goes higher, it goes higher is what it is. But knowing that, I'd rather utilize those funds for other purposes so that when we do have the next, you know, dump in the market, which might not be for a while, who knows, I'm better prepared to capitalize on that versus, you know, not being able to. Hence why the prop firms, why I prefer that. But it really won't take that long if you get funded on like a 100K account, you know, a few payouts realistically. And then you can start building up, you know, a nest egg or building up a portfolio that then you can eventually transition to using that as what you trade. So that's kind of my view. But what I was thinking about too was, and I'll talk about this in the future, but I was thinking about for the prop firm that it doesn't really, you can do any prop firm you want to look at, but for this prop firm that I have been using, I guess, for the past couple weeks, one of one, this prop firm, so if you jump down here, right, all the different options that they have, let's say you go to like a one-step account, for example. So the way that you would scale this is you would come in and you would trade, let's say, whatever account size you're comfortable trading. So let's say you're like, yo, I'm just starting and I want to trade a 6K account because you're used to trading with a couple $100. So you trade the 6K account. Now, these are the numbers you got to be watching out for and whatever. But you're trying to get 8% profits, which is like, I don't know, a couple $100 is your target. So it's not that crazy, like dollar amount wise, and it costs $65 to do it. But you get funded on one of them, and then you immediately you get your refund of the fee that it costs to essentially buy the account. You get the refund. You then take that refund, and then you essentially double that. So you got to pay out of pocket, right? But you paid that 65. You get funded. Now you pay 150. You get the 15K account. You attach a trade copier. They're like 10, 15 bucks a month. So this is what I'm going to be testing out in the background. So I won't have a video on this for a while, but I'll just see how it goes. You then get a trade copier where you trade your 6K account as normal. You connect the trade copier and you say double my position size on the 15K account. So every trade you take here is automatically being, like, within milliseconds, being copied and traded on the other account at double the size. And so now you're essentially trading two accounts by just trading one, right? You're trading two. And if you're profitable, now eventually this 15K account, that gets funded. So then once that's funded, you refund this fee, you take the 150, you funnel it over to the 25K account, you do a trade copier, 2x off the 15K account, and etc. from there. That's how that is, if you're profitable, again, because in the world of, like, in real trading, the margins are not massive. You're not going to go from, people have gone runs. The reality is that they very likely do not deploy good risk management to go on those runs. And so they might make a lot of money in a short period of time or do very well percentage wise, but the chances of them completely unwinding that are very, very, very high if it's not done with proper risk management. And many people who start trading and they're like, hey, I'm going to just try to get funded, or I'm going to make a lot of money now and then I'll think about risk management. Like, that's not the way to do it either. Like, it's not, that's also dumb, because it's just, psychology doesn't work like that. You could, very, very, very few people can get lucky and then dial it in, that switch can turn on, and now they're like, okay, now I'm going to be very nice and conservative and actually deploy risk management. No one does that. So you kind of keep stair-stepping your way. Next thing you know, you're trading one account, but you now have three accounts, and it doesn't really matter. You have three accounts technically, or whatever, however many accounts, but you just trade your same way on one account, and it just gets copied over. So my problem that I would have is, like, are the fills, how is it exact? Like, is it going to be the exact? So what I want to do is test it out maybe on a smaller one and do like a half size. Take my current account and trade a half or a fourth size with a copier. So it's a very low risk. It's, it would really cost me like $75, because this fee plus a 1 month trade copier fee to do that and like make a video on and see how it works. Because that would, in my thinking, that would be the most logical, smartest, and safest way to scale up, because ultimately you'll then have a ton of money in your back pocket that you're trading with while you're just, and it was a very systematic and slow process. Because if you trade one account and you let's say it takes you 3 months to get funded on one account. Now, some people, that's like, what the fuck? They get funded either tomorrow or the next day because they just go all in. If you're trading normally with really good with good risk management, it should probably take a couple of weeks at least, unless you go on a massive run where you don't lose for a while, which is possible, I guess. Let's say you get funded on the 25K account 3 months. You're going to go through good months and bad months. Maybe 1 month you make $2,000. Maybe 1 month you lose $1,000. Maybe 1 month you're flat. So it's like, you're kind of sitting there like, it's great. I'm funded, and yeah, maybe I'm profitable, and I'm making a few bucks, but it's nothing super crazy, awesome, amazing. So that's where having the second account, or being able to work on that next, I guess, whatever you want to call it, challenge or whatever, while you're profitable on one, and then in the process, you're almost like scaling up on the second one in the process. So I don't know. It's my thoughts about it, but I got to turn off this thing really quick. 1 second. I got a fan on in the background. It's like just being annoying. But yeah, that's my thoughts about the way to scale. So I'll likely be the test dummy to do it and try it. But in theory, it sounds like it could be a good idea. But again, it all comes back. Like you have to be profitable. You can't not be profitable and think you can do that. If you're not profitable, yes, you can get lucky, but you'll likely lose the accounts. I have proven through tracked journaled log data for 9 months that I've been profitable, maybe 10 now, like that I know for sure. Prior to that, up and down. Yeah, I had no idea. I wasn't tracking it enough to know, truly. I have in 10 months now, roughly, of like, I know I've been profitable. So I feel like thinking about that makes sense. But again, it's like you have to have that, in those 10 months, I went back and looked. Best month of that 10 was October when the market was the weakest. So I cannot wait for when we see downside. I cannot wait for it. We just haven't gotten it. And upside's good. Don't get me wrong. It's great. Things going up. It's awesome. Woo. But like for the way I like to trade, I think it really fits the best on downside trades. Breakdowns, weakness. Just haven't gotten it. But not bad. It'll come. When it comes, it comes. Which I think is honestly great. Like if you were really, let's say you were a break-even trader in bull markets and you were a profitable trader in bear markets and you just traded for like your entire life. Think about that. Like while the bull market's going on, if you're breaking even, but your investment portfolio is just kind of slowly kind of building up in the background because you're not trading that, you're just letting it do its thing. And then the bear markets, you're making money while your investment portfolio is going down. It's kind of a cool way to like negate the negatives on your net worth. If you, or you could be like, hey, I only trade bear markets. Some people like do that. They know their shit. They know their thing. They know their strengths, and that's it. What's going on? Flip us in the house. Yeah, I think the gold trade looks good. The only problem, like I was saying, is the swap fees. Oh, guys, I just got the refund. The refund has just been processed. How much did I pay? I paid $468. I really paid that much for that shit? Jeez. $468 I was refunded. Yeah, it was because the account was costed $520 and I had a $52 discount. So yeah, $468. Damn. Well, finally went through. Yeah, that's the thing. When you get downside, I mean, like that's the thing. Like the movements come quick, and we saw that. I think and I wasn't trading momentum at the time, back in 2022. I wasn't trading the same way that I trade now. I was just trying to be the dip buyer back then, which I think a terrible trading strategy for me. It didn't work for me. Not saying that you can't be a dip buyer and make money. You can, but for me, that just wasn't the best strategy. The way my brain works, the way I see things, the way I like to trade, whatever, how I manage risk. So I ended up kind of getting tossed around. Well, not tossed. I just missed out on what could have been some amazing downside trades. I mean, you can go back to some of those charts. Like if you go to Nvidia's chart, Nvidia is going to be this is going to be a stock that's a staple on the watch list. Like you are going to want to have this one. It's like Tesla. You can't not have it on the list to trade as an option, up or down. It's been amazing up, and it, I'm sure, was amazing down if you look back in time. So this thing hit highs right here back in 21 of 350-ish, just shy at 350. But like, look at some of these moves. I mean, you had, right, big move down. You could have drawn your lines in and your levels in right here, said, okay, here's your support. You then get a big push down. You get a nice consolidation right here. Breakdown next day. Just absolute beautiful movement to the, yeah, some good stuff. I think there'll be some good trades on that whenever the downside does come. If it ever does, I guess, at this point, right? If you ask some people, oh, it's never coming because Nvidia is the best. I'm sure it is. I'm sure it is. 60.68%. Yeah, this is what I would say on gold. This is what I think looks juicy. The only concern that I have is that I would be concerned about what happens tomorrow with gold. The problem is that if this is breaking out and we get confirmations tomorrow, like it could be, it could be flying off to the upside. That's the only thing that I would say. Sorry, back to gold. Because the dollar and the 10-year tend to move off the Fed meetings and stuff. So when they do, gold moves usually pretty decently up and or down. So this long swap is, I don't know how much that would cost me though. I never the calculations for the swaps, like it's just something that's fairly new to me. So like, to be honest, how I've been kind of figuring out the swap fees, like I just kind of get in and then hold overnight and see what happens. And then however much I see that it charges me by the next day, I'm like, okay, that's a stock or that's a ticker that that's not a good idea to hold too long. Like I'm up to $38.94 in swap fees on my Dow position. So that's now, I moved my stop loss up so that like it's not a big deal, but yeah, it starts to become, like kind of annoying. Like it eats into your profits, If you're profiting, if your targets are $100 or $200, $40 is a decent amount of a fee, right? That you're paying on a $200 profit trade. It's kind of annoying. So something to keep in mind, but like, and I've been only holding this one for a little over a week, about a week and a half. So I got in on Friday, the 24th. Yeah. And it's now Tuesday, the 30th. Now that was that they charge more of the weekends because it's like a 3-day hold. So it was 2 weekends there on this. Ideally, I didn't think it was going to take this long, but it hasn't hit take the stop. So I'm like, yeah, I'm going to hold on to it. But, ideally it should have happened. This would have ideally happened faster in a perfect world. But yeah, for almost $40 in swap fees is like kind of annoying. So something to think about like that. And that's the concern I have on the gold trade is like gold doesn't move very fast, or it can move, but it also doesn't always move very fast. So like this trade could be weeks. It could take weeks to play out. And if it takes weeks to play out, is that going to eat away at the profits that's not worth it? Yeah, maybe it's not worth trading. Maybe this is something that's more worth swinging in, a portfolio. And I don't know. Is that the best way to play it too? I don't know. I guess you can go to like, what's gold? GLD. Gold, Spider Gold Trust. You can go to SL. Yeah, GLD. You can change GLD, I guess. And then what is that? Like you're risking, I guess, downside of like 2% to make 4, or 5%, I guess is what your target would be. Targeting probably like close to $200 on GLD. Yeah. Just shot. I would target like 199 would be around the same threshold that gold's move would be to where I was looking. So yeah, you target something like that. Yeah, you could do that. And then you can just leave it, just sit back and leave it, like, put a stop loss on it. And then once it hits a target, you just get out. Probably a better way to do it. Because this way you don't have to worry about swap fees. And it can take as long as it wants. Another perk to, again, like prop firm's cool and stuff, but, ultimately, I think the reality is you want to do it with your own money on a platform or multiple platforms that you can trade literally whatever you want. I think Robinhood is trying to get into the futures game. I think that was a thing that they're supposed to do soon. Is that? Let's see if that futures plans. Crypto trading the EU. Okay. Let's see. I thought I remember seeing them a while back saying that they're trying to get there. Whenever it comes, I mean, that's going to change the game most likely if they get into futures. The Renko system, nice. But yeah, that's just keep on working that system and refine. That's the whole thing. It's just like there's refinements that have to be made. I think that like this is not doesn't need to be super complicated. It's not easy by any means, but it doesn't need to be super complicated is what I'm kind of getting at, to where like you have to figure out or pick a strategy and then use that kind of like as like the base, as like the core of what you do. And then from there, like you'll have to adjust that and add a couple extra things here, take some things away until you have something that is a bit more lean and profitable, whatever. And then you just keep making those adjustments over time. That's kind of the way you have to do it. But I honestly kind of feel like I haven't had the best streak. It's not, I would say streak, but you know, you almost want to go into a deep losing streak and almost, as stupid as it sounds, like see what you can really, because it forces you to really reconsider things and go, what is going on here? What's not working? What do I need to fix? And then it's going to make you better at the end of the day, as long as you stick with it. The problem is that most people don't have the time, or they say they don't have the time to put in, to create their own strategy. I honestly, the more that I think about it, the more that I've started to realize that the most fulfilling and the literal way is your own way. Like, you have your own system, your own strategy, which can be adopted from anyone else. Like, you can adopt it from, like, the breakout strategy that I have has been adopted through multiple people over time. Like, yes, I figured out what a bull flag was and a bear flag was. And then I eventually started to listen to people here and there. And then I eventually, you know, I was in countless Discord groups over the years, and I started to take things from this person, from that person. And I figured this out. And then I started to say, okay, how do I see it? And the past, you know, I don't know, since last summer, you know, it's been just me critiquing my own strategy. Any adjustments that I make are just my own. So it's been just how I see it, and that's it. And, you know, I adopt things from there. And that's why I've kind of created the false breakdown offshoot of my, you know, main strategy, which is essentially just the inverse of my strategy, but under only certain conditions. But that was, you know, that came from just my own. I saw this happen enough to where I'm like, that's what I'm going to do. I'm going to play a false breakdown, reversal play, and, you know, go from there. We just see a little pullback here in Spiggity Spy. Let's see. Here's the 1 hour chart. Go to a 5 minute so you can see it better. Yeah, a little bit of a big move there. But that was because I believe there was something that just dropped. Some news just dropped. Consumer confidence just dropped. That's what it was. So, yeah, it's kind of annoying, but consumer confidence, the 10 a.m. consumer confidence reports, they almost always spike up or down the market. And so it's the easiest thing to get you stopped out of a trade. These stupid 10 a.m. consumer confidence. It's like, it's really annoying because I've caught myself in them a couple times and gotten stopped out of stuff that I didn't need to be, because I could just waited through, and then eventually it recovered right back to where it was post consumer confidence. And I'm like, oh, this is so annoying, but it's a pain in the ass. Yeah, that NQ false breakdown yesterday would have been nice. Now I'll go Qs to show you like the idea behind it, but yeah. Let's pull that up. Yeah, I mean, that was this wick right here. Whoop, right back up. Would have been a beast of a trade, because you could like, and these, like, you know, there's ways that you can craft a strategy around it. Like, you could have, you know, stops below here, fair, so very tight, right? You could sell 80% of it, you know, at a 2-to-1 risk reward, and then you could say, okay, now I'm going to put my stop loss to break even on the rest, and I'm going to just trail this thing up. And I mean, if you had done that, obviously it's hindsight, it's easier to say, right? Either way, let's say you had captured some of this move, awesome. If you had somehow held through all of this and then capture any of this, insane. Like, that's my next kind of piece, is being able to stay in moves longer, whether that's intraday or that's on a swing time frame. NVIDIA and AMD were my recent examples of kind of not misses. Like, I didn't miss, but NVIDIA was one where I had sold, I think I had sold all of my NVIDIA 2 weeks ago, whenever that trade was, at 550 on this breakout. And it has gone obviously now to 630 something now. So like, it's gone way, way higher. But you can sit in these moves much longer, once you've locked good gains in, and you can guarantee you're not going to lose. It's easier to do. But yeah, so let's take a peek at volume here. Let's go to like a 15-minute chart's good to go, because you can see past, there's 2 candles at least on the day. So NVIDIA volume wise, let's see. Compared to yesterday, it's not bad. Actually, pretty good volume there compared to yesterday at the beginning of the day. Tesla volume wise, let's see. Not bad. Nothing insane though. Meta, strong. It continues to be strong. Pretty decent volume, actually. It's not as high as it yesterday, first 15 minutes, but it's up there. It's good. Certainly good. And that's, I don't want to say concerning. Well, no, Meta's on Thursday. Sorry, Meta's got earnings on Thursday. So we have time on that one. Microsoft's got earnings today. Microsoft volume, I would suspect, could be low. First 15 minutes, not bad. And then it's starting to tail off in a big way. So we'll see how that kind of shakes out. Let's get Qs and SPY. That volume is not super high. I guess I can go to a 1-hour chart now and start to take a peek. Volume is not great. Well, I guess 1 hour is not the best, but I could probably go to 30-minute. It's not super high, and it hasn't been great the past couple of days anyway. So I think we're kind of fun. We're seemingly being, we're trading in this like sort of lower volume, not really crazy high volume right now at all. Yeah, NQ after hours, that's the play. Like that's the way to play. Like if you're playing earnings and stuff, playing the after hours action, because you're gonna get big reactions to Microsoft, AMD, and Google. I had built a list of, Nike was on my downside watch list. Let's see how that looks in the daily chart. It's on the day now, and that doesn't. The past 2 days have kind of invalidated that, because I was thinking if Nike can break under $100, you have a potential downside trade here. Nice consolidation break to the downside, if it did, but it has obviously done the opposite. So I can probably consider getting rid of that one on the list, because I don't think that that's even worth keeping on the list. But my upside list, Verizon caught my attention. Honestly, the tighter this thing stays in here, the better. 4250 breakout is interesting, because that would be a key level from literally a year ago. So Verizon would kind of be breaking out into open waters that it hasn't seen in over a year, which then I think there's some big gaps to fill up here to the upper 40s. This 49 would be kind of an upper target that I would say is not that insane to think about, although it probably just takes a long time to get there. You're probably looking at this gap to fill right here being much more reasonable at 40, I'd say 45. So my thought process on this was, if it holds this consolidation nice and tight, break the consolidation, so get in at 4250 or something, and then if these higher lows hold, stop loss at 4150, so you're going to risk $1 to then make 250 and target 45, so that could be a good trade. I have an alert. Do I have an alert set on that? No, I don't. I'm going to put an alert on that though. Yeah, it just simplifies the game a lot, because set these and all right. That's it. Like I don't have to worry about it. Let it do its thing, and then the alerts pop up on my watch, on my phone, wherever I am at the time. So then I can come in and check if I want to get in. MCO. What is MCO? Moody's. Oh yeah. This one was a watchable one, but the one problem is they have earnings not for a while. They have earnings on the 13th. Is that Valentine's Day? It's around Valentine's Day. So you have about 2 weeks or so, which I don't know if I'm interested in that. BlackRock needs to get above 815, 818. Wells Fargo, this one it is breaking out right now. That is interesting. I do think this could be good, but I don't know. The upper wicks is not the cleanest of breaks to the upside, so I don't know if I love that price action. And the reason why that you zoom out on this chart, and I think this is like, oh man, like Wells Fargo, kind of same thing, right? Breaking out into open waters here. I think you get a push up into the mid 50s here. Would not be surprising to me. EQIX is another one that I considered getting in yesterday. I did not. And I may potentially. Yeah, I was looking for volume, and it did get the volume. Yeah, it had the volume. I was looking at the time that I saw it breaking out. I don't believe the volume was super high. So I think I just let it go. But it ended up getting decent volume on that break. And now it looks like you're starting to get follow through on that. They don't have earnings until end of mid-February, the 14th or so. So they have earnings in about 2 weeks. So kind of a similar thing, but that's breaking out to highs. So yeah, that could be a really nice look. That's a really nice looking chart. Damn, that's a good chart. Where does it have a shot? These are the highs here. So 850 is probably your first target, and then we'll see from there. Yeah. Geez, that could be a miss. That could be one that I look back on and go, shit. Because I got the alert yesterday. It was like midday, and I was like, volume. I couldn't tell the volume was looking very strong. Volume must have come in at the end of the day, I assume. Let's see if we go to the 5-minute. Yeah, it did. Volume really, look at the volume there. And this is what's awesome. When you look at some of these stocks that don't trade a ton of volume, look at how shitty the volume was, and then look at yesterday. So far in the morning, right? Better volume. And at the end of the day, look at this. Much better volume than it had been getting, prior past couple of days, which is a good sign. And that end of day, right? You had that pullback, and then the end of day was a push. So if I had been watching it yesterday, shit, that could have been one to throw on the list or one to throw some money at, because that trade would have been good. Would have been very valid. And then your stops would be under yesterday's low, which would have been around 810. Yeah, 810. So if you entered at let's say you entered at 830, you're risking $20. Let's say you got an 830. Let's say you risk $20. So 2-to-1 means you got to target 875. No, 870. Yeah, 870 would be 2-to-1. 850 would be a 1-to-1. That's the first target. Maybe you take something off there, and then you let the rest go. So it wouldn't have been the risk reward, because of what I look back to the left, prior highs and stuff. It's not super, super juicy. Although, if it just blasts through like Nvidia and stuff has, which it could, if it just blasts through, it doesn't matter. I think it'll go crazy. So who cares? Yeah, the Verizon chart looks interesting for sure. I could be looking at that here soon. Yeah, a Top Step would be a very big time. There must be just because you can't trade CFDs in the US. So there must be some other reasons why. It must be just harder for them to be able to get them available. And it's not like stocks are. There comes a downside on the prop firms. The one that I have, it's like $6 commissions both ways, either each way. So $12 in commissions you're paying minimum to get in and out. If you want to scale out, that's more. It's 18 plus, and then swap fees. So it adds up, and it ends up kind of eating into your gains. So you got to be careful. But as you size in larger, that becomes a smaller percentage of your. I was just thinking about that yesterday, and I was like, yeah, I think I'm still sizing too small, because let's say I made $150 on a trade. Let's just say, which I think yesterday the AMD was like 175. Let's go off of the AMD, 175. If you go off the 175 AMD trade and then you pay $12 in commissions, right? You're paying 6-7%, 6 or 7% in commissions, essentially, which is a lot. That's a lot. So now, prop firm, not trading my money, positive. 100% profit splits, positive. So if I'm paying 6% commissions, it eats into, and it's like almost like I'm, and then a little bit of swap fees. It's like I'm paying 10% profit split almost, but I'm paying that to the broker or whatever. Like, so okay. Again, annoying, but it's part of the game. Most prop firms don't even have stocks anyway, and they don't have 100% profit splits, so you're giving away a lot more of your gains. So, give and take, just like anything else. 10 years gone up. Yeah, with that move, I just don't think, so far, it's been almost an hour, I just don't think I'm going to trade anything today. Just nothing is getting me interested. That only thing that I thought was good was gold. And that has since plummeted. Not plummeted, but it's come back nicely. I think the gold trade is there. I think we're going to have to just wait until after tomorrow. I don't think gold doesn't give a shit about earnings. It's probably more Fed driven. So watch what happens tomorrow. If the gold trade sets up, I think that would be the trade that I potentially take tomorrow if it sets up and we see how things digest. But yeah, I mean, you're getting a nice pop on the dollar. Well, not really. The dollar's up a little bit. The 10 years up a little. It was red. Now it's up. So at a key spot right there on the 10 year, that's for sure. So yeah. That's really it. I don't mean to be boring, but yeah, that's kind of the thing. I sold a covered call on Bido at the 22 strike. So that's out to this Friday. Shit. It's like free money. Yeah, it could get there, I guess. It's only Tuesday. It could get there. So that's possible to get there. And then I sold a covered call on ARC at the 51 strike. So Kathy Wood, as long as, well, if ARC gets to 51 by Friday, I'll be taken out of that, which I'm also not opposed to because it would have made good gains. And then, yeah, so that's that. I'm just letting my portfolio do what it does. Pretty chill. I ended up getting out of TLTW because I had too much TMF. So I just left my TMF. I sold this a couple days ago, just because I was like, yeah, it's paying you dividends, yes, so it's not terrible, but I'm just like, yeah, I'm gonna leave it alone, get out of this, because it's not. I have just too much. I don't need to have too much TLT exposure, so I got enough with TMF. Just leave that alone. And that's it. And I got SLV, Jeppy. Yeah, but we've trimmed that out a little bit. I've been trimming some money slowly off the top of the Robinhood account, little by little, every month, especially if we have another push up. In the coming weeks, and yeah, I'm probably going to trim some more out of it. So we'll see. Not seeing much. Yeah, and that's kind of today. Like, go back to SPY. Let's check on that volume again really quick. It's not super surprising because of what we have this week. SPY is that nice little break. Like, SPY could be a nice breakout candidate above this level here, 491.40. Could be a good candidate. It's a nice bull flag, but we'll see if it gets there. It has to break it. It hasn't broken it, so we will see. Yeah, gold just came right back down. But again, right, so far, here's the volume. Now, obviously, this is the final hour of the day, so these are high numbers, but it's not great. Not looking amazing so far, so TOT, AVG, V, AVUV, AVNV, and IDVO, PAL. Yeah, I mean, I'm gonna rethink how I want to do that, my Robinhood portfolio, when I start building it back out at some point. But I don't really plan to do so until the market, is down for a while. Like, we need to see. I don't want to say necessarily a bear market, but at least a bigger correction of 10+%. So whenever we get that, then I will consider it, but I'm not really interested right now, to be honest, in, adding much to what I have. Leave them when I got it. That's it. So, okay, I think I'm going to wrap it up here for today. I know it's kind of unfortunate. It's boring, but yeah, nothing here. The only thing that I have is a DAO. I have a DAO position open. And that's it. The plan is going to be, I'm going to mess around. I just got that $400-something refund, so I might today or tomorrow very cheaply buy a $6,000 account here, connect a trade copier, pay $75 to the trade copier, like $10 a month, and see if I could, do it trade copier, how that works, so that if you get, when the funding comes eventually, I can see how it would, if I can apply that to higher account sizes and then essentially scale up faster, but also by just trading the same size that I trade on my, 25K account. So I don't know. We'll see. That's the plan though. I think I'm going to do that and see how it goes. So that is something that I'll have working in the background, and I'll be the guinea pig. So we'll see. Thanks so much for hanging out, guys, and I'll see you tomorrow. We'll have a power hour stream. We should. Thursday, I'll be back here same time. And